The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. Welcome to our weekly investor series. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Today we'll have a special investor briefing for you where we'll be looking at CPJ, or Caribbean Producers Jamaica's results for the year ended June 2023. Joining us today are none other than Mark Hart, the Executive Chairman, and Tom Tyler, both co-founders of the company. Good evening, gentlemen. Welcome to the program. Mark, Tom.
Hi, Dan.
Also, we have
Gary.
Also, we have joining us our CEO, Gary Parrott. Welcome, Gary.
Hi, guys. How are you?
Good deal. Well, if you guys are a fan of the content, then don't forget to subscribe to our channel and also hit the bell to stay up to date. We upload content like this just about every week. And don't forget to stick around for our Q&A segment at the end of the program. You can submit your questions in the live chat. Additionally, if you want to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Well, as we promised, today's presentation is on CPJ. And with that, I'd like to give a basic introduction. So again, welcome Tom. Tom is co-founder. Mark is Executive Chairman, co-founder, and acting CEO. So welcome, guys. Really looking forward to discussing your year-end results, which finished with a bang.
Thank you.
Good deal. All right, guys, so if we could put up the results. I don't think we need to tell folks about CPJ. I mean, CPJ is a leading purveyor of goods and services to the hotel sector in Jamaica, and they've been around for a very long time. You just need to look at Tom Tyler, who founded the company almost 28 years ago. Tom's a great guy, so is Mark, and these two guys together make the formidable duo. So CPJ results, the year end is June 30th, 2023, and the results literally came out on Friday, and I'm happy to see a 19% increase in sales to $142.5 million US dollars. Folks, all results presented here are in US dollars because these guys supply the hotel sector and do most of their billing and earnings in US dollars, so their functional currency is United States dollars. So after a 19% growth in revenues, we see a 12% growth in gross profit up to $39 million US dollars, and with them maintaining a very healthy gross profit margin. We see selling and admin expenses growing by about 35%, up to $24.6 million, and we'll be talking a bit about that and what cost containment measures will be deployed in the future. I believe there's some one-off exceptional expenses of about $1.9 million US dollars included in there, and we'll discuss that. And the result of that is that the operating profit fell to $10.25 million, a fall of about 17%, while the net profit attributed to shareholders fell by 23% to $5.7 million compared to $7.5 million last year. And again, I do want to point out that there's $1.9 million in extraordinary expenses this year, which had you adjusted for that, the profit actually would have increased to $8.2 million, which would have been a 5% improvement over the previous year. And we'll definitely be talking a little bit about that as we go on into the program. What else? Total assets up by 2% to $90 million US dollars, and shareholders' equity as a result of the profit for the year growing by $6 million US, or by 24% to $32 million. Spending a bit more time on the balance sheet, it's good to see inventory at $40 million, falling to 135 days. Previously, they were carrying about 170 days of inventories, and we'll be talking a little bit about that as well too. Similarly, accounts receivables have fallen to 48 days, coming from 56 days a year ago, and that's about $19.4 million of receivables on the road. So in their $90 million of hard assets. They've got about $5 million of cash, $20 million of receivables, and $40 million of inventories. And with all of that, they've done a really good job in managing their working capital, where we saw a $20 million improvement in their working capital. A combination of them sort of refinancing $10 million US dollars from short term to long term, and them also reducing their payables by about $9 million. And we'll be talking a little bit about that, but kudos to the guys for doing a good job of managing the working capital. See good improvement there. And then the last thing I want to mention about the balance sheet is the leverage, the fact that they have $23.5 million of net debt. But when you think of the metrics, that's only sort of a 45% debt to total cap ratio. Business generates $14.6 million of EBITDA, so the debt to EBITDA is only 1.6 times, and their interest coverage ratio, which is when you look at EBITDA to their finance cost, is 4.3 times, which is really healthy. I'm used to seeing businesses running interest cover of 2.5 times and carrying debt to EBITDA of up to 3 times, but certainly 2.5 times would be healthy. So at 1.6 times, the leverage is nice and pretty tight and comfortable. And so it's good to know that they have great working capital and great reserves in the tank to drive the expansion of the business in the future. And we will be talking about the expansion, the opportunities, the capex needed to make that happen. Looking at the key statistics, we sort of can see that the share price closed at $10, and that's a 12.2 times PE ratio in a market where the average is about 10 times. So it's trading a little bit rich, but we'll get into that. I think because of the growth prospects, there's no surprises there. Trailing EPS is 82 cents, and trailing earnings in Jamaican dollars is about 900 million Jamaican dollars. And this business has a market cap of 11 billion Jamaican dollars. So reasonably sized entity playing in the tourism space. Next slide shows the profitability by quarter. And the first thing I want to comment on is they've had 9 consecutive quarters of profitability. So coming out of the COVID or the pandemic, we can see that the business for 2 straight years has been returning good profitability, with only 2 quarters here that I've noticed the sort of fall in profitability. That looks like Q2 2022. If my memory serves me right, that was their first year of paying full taxes, and they took about a $1 million adjustment or true up in the fourth quarter of last year for their corporate tax line item. And then you can see also in Q3 2023, again, profit was a little bit lower than average, and I believe that's where they took the $1.4 million hit for the customs and duty assessment that they've been talking about and trying to resolve with the customs folks for over 6 years. So good to see that that was finally resolved, and that sort of formed the biggest extraordinary adjustment that they faced this year. But other than that, you can sort of see, folks, that the profitability is running at about $2 million per quarter on average. And so I expect at least $8 million of profitability going forward, plus the growth prospects. And we will definitely be talking about the growth prospects for CPJ, which again is a leading purveyor of goods and services to the hotel sector. So as that sector is growing, I definitely expect to see the profitability and sales of CPG growing. Last week, we talked about Express Catering and their growth prospects as a result of folks coming through the airport and spending money in the food court. This week, we're talking about the guys who supply the hotels and why we would expect similar growth as tourism expands in Jamaica. So we'll be talking a little bit about that. Next slide, last one for me before we get to the Q&A, folks, is to show what's happened with the stock price, and this is definitely one of my personal favorite stocks. You know, it's a good one. Again, if you're thinking about tourism, here's another viable option to ECL, as we talked about it last week. Here is a stock that's traded at a high of $22 in the last year. In the pandemic, this stock was as low as like $2.50, and I was like, geez, this is a no-brainer, and I personally bought a fair amount of this stock at like $3.54. I was tempted. I couldn't help myself. I did sell some, Tom, at $20. You can't blame a guy for taking some profits, but I still have a fair amount of CPJ in my portfolio, and I intend to keep it that way because I do think the growth prospects for this over the medium to long term are very strong. And I would be surprised, folks, if I don't see this stock at $20 in 12 months' time, as we see once again, PEs are going to trend back up as interest rates come down. I expect interest rates to start coming down, anywhere from last quarter of this year into first quarter of next year, and I expect to see the market go from being a bear market to a bull market certainly by first quarter of next year. Again, as interest rates trend down, we saw the recent upgrade of Jamaica by S&P. You guys saw the article by the Minister of Finance talking about what that means and how that's going to impact the cost of borrowing for the country going forward, as both foreign investors, primarily foreign investors looking to Jamaica, will see it as a lower credit risk, and from a risk-adjusted return perspective, that will make investing in Jamaica, whether equities or in fixed income, look much more attractive. And I think that combination of lower interest rate and greater confidence in Jamaica means that we're going to see the interest rates going down and then stock prices generally going up as Jamaica becomes an attractive option for both foreign investors and local investors. The guys who are sitting on the fence today and earning 8-9% on 90-day GOJ treasuries, you're going to see a change in their attitude as respect asset class investment as interest rates trend down from 8% closer to 5%, and then even lower. Remember, BOJ treasuries are coming from a low of 2-3%. So to see them up by 500, 600 basis points in the last 2.5, 3 years, primarily because of the pandemic and different governments and treasuries' attempts to control monetary supply, you're going to see that all change over the next 6 to 9 months, and we're going to go back to a bull market. That's my expectation. Okay, so that's my quick analysis of CPJ and a little bit about the macroeconomic environment. So let's jump into our first question for the guys. And again, folks, remember, please, start to send in your questions so we can address those as well, too, as we go forward. So first question, I'm going to throw this one at Tom. What is the proportion of revenues allocated to the hotel sector and retail sales, and what has been the performance of each segment thus far?
Well, Dan, pre-pandemic, and I like to tell people that CPJ is a different company from pre-pandemic to today, right? Prior to the pandemic, I would say 95% was hospitality driven by the hotel sector, and a very small part of our business was retail. Going through the pandemic, we made changes in Jamaica, and we've converted that. So this last year, I would say that 70% was what we call hospitality or on-premise business, and 30% was retail business. And of that 30% in Jamaica, probably about 6 or 7% is our retail stores. So we've made a significant effort to develop staff, sales staff, to expand our retail business in Jamaica. And then in St. Lucia, our retail, our hospitality retails about 65-35. Now, during the pandemic, we built a grocery store, our first grocery store in St. Lucia, an 8,000 square foot store. Presently in our CapEx expenditure, we're building a big store in St. Lucia right now. Should open in January. Right now, we're running about 65% on-premise and 35% retail through our retail store. That'll switch to about 50-50 once the new store is completed. So we have big expectations for growing our retail direct business in St. Lucia. So it's made a big difference in our business and balancing our stuff out. We are pre-spending on staff to develop, to grow into these other sectors, but it will make a difference in the long term. So we're really excited about expanding into the other sector that we weren't strong in prior to the pandemic.
Yep. Sounds good. So Tom, tell me, my second question, when's the anticipated completion date for the expansion of the company's manufacturing plant?
Our manufacturing plant, they're chipping at it every day. Lead time on some of this equipment's 9 months. Build out is in process. So we are looking for second quarter next year, our fourth quarter, to be up and running. So I think we'll really feel the effects of the meat processing facility in this expansion in next year, not this year. So the first quarter will be more, getting it all working properly.
Okay, I think we lost Tom for a second. I'm sure we'll get him back in a minute. So Mark, let me jump over to you. The real question I want to ask is, you did $146 million in sales, 20% growth. Where do you envision this company in 2-3 years? What is the potential for growth of CPJ? Where can we expect to see these sales going in 2-3 years' time?
Well, as you said it, Dan, the last year was a phenomenal year. We picked up, I think, $22 million of additional revenue, and we really are being very bullish on a continuation of that sort of level of growth. Tom just spoke about the St. Lucia store. That's a very significant piece of business infrastructure we're putting in place, and that store alone, we're anticipating to provide about $1 million a month in revenue. Of course, there are 3 very large properties already under construction, and those are going to provide additional revenues, when they start to open up in the middle of next year. So we're already thinking about the 250, the $250 million, I like to say.
Yeah.
Mark, in terms of where we want to be within a fairly short period of time. Definitely within 5 years. We expect to be at $250 million. So that would be adding $100 million, $20 million a year, maybe more than that. I think we can shorten that time frame.
Great. So there's clearly 5,000 hotel rooms under construction that we expect to come on in the next 3-4 years. And you're thinking you can get to $250 million in sales and still protect your sales margin, which runs at about 6%?
Sales margin meaning
net profit margin. Net profit
to the
margin.
bottom line, you mean?
Yep, to the bottom line.
Yeah, that is the idea. We would like to maybe increase that amount
if
of
possible.
margin. We're getting more efficient, Dan. I know, we've announced the capital expenditures, and one of the things that we're going to be spending on, apart from the processing plants and all of that, is our new ERP system. So although we did all of that investment during COVID in IT, that was all done on a Great Plains existing ERP that we've had in place for the last 15 years. So we had to bolt on a warehouse management system, a dispatching system, a supply chain system, a customer service module, remote sales pads. All of those things are bolted on. We're now evaluating a fully integrated ERP, which is going to be a significant investment for the company, but it's going to allow the entire company to be communicating with each other and drive a lot of the efficiencies that will help to raise the profit margin that I'm sure you're interested in. As you said, you're one of the large shareholders of CPJ, and I know Gary and is CEO of Mayberry, and of course, it's well-known fact that Mayberry has made a significant investment in the company.
I appreciate that, and I think that's an appropriate time, Gary, for me to allow you to ask a question if you have one for either Tom or Mark.
Well, even again, gentlemen, I mean, the first big question, the true analysis of CPJ's numbers is after you take out the one-time hit from a legacy issue. And I think when you do that, you end up with a number closer to $8 million US.
After tax.
I'd like Mark and Tom to just speak to that because for about 4 or 5 years, CPJ struggled to break through a $3 to $4 million US profit level. Obviously, we went through the stress of COVID, but coming out of COVID, I mean, where's this company coming from? I mean, you have blown past 3 to 4 million, and you have now shown that after last year's 7 million performance, you effectively have maintained and improved on that. So what's the reason for that, one? And two, what's the outlook? Should we be looking forward to 12 million US next year?
Uh, I don't know about next year, Gary, but I'm sure we will give it our very best. But it's a good question. We have never had 9 quarters, as Dan. I wasn't counting there, but I know we haven't lost money since we started making money after the COVID period. And we're making money in quarters that normally we would have some very difficult times. So 9 quarters of sustained profits in a business that relies on seasonality, we feel very good. So COVID, after the IT problem that we had back in 18, we invested heavily in information and systems and people. And then COVID, to be very frank, just gave us the opportunity of right sizing the company in terms of the human resource capital, and also combining that with the technology that we're putting in place, has really led to just much better performance. So that's something we're building on. We've put the right people in the right places, and we have the right technology, and we're just a lot better company now, Gary. It's a fact. If you just took a snapshot of CPJ leading up to that WMS failure in 19, and even right after, and then you took a snapshot now, which is not a long period of time, it's a completely different company. People-wise, system-wise, service-wise, the trucks, I come to work at 8:30 and all the trucks have left. In the old days, there would be trucks lingering around till 10. The warehouse was a buzz of sort of like a little bit of chaos, but now it's a well-oiled machine, Gary, and that's really paying huge dividends, and something we want to build on.
And the thing that
Gary, as far as your outlook, Gary, and what it looks like in the future for us, obviously this year is a year of investment. I mean, we're doing our solar project, which is a nice to have, and it's going to save us money on electricity. But on the meat processing facility, getting that up and running, getting the capacity out of that, the large store in St. Lucia, we're going to get a lot of juice. That's a game changer for St. Lucia. The retail stores that we put in Jamaica have changed our business, has made us much more visual to our customers. They're like showrooms of what we sell, whereas we used to be the guys that nobody knew about. Now people sort of know CPJ. It's becoming a brand. Brand CPJ. You'll find more branded products coming out in the future through our manufacturing facility for the retail space. And then on top of that, we have the organic growth of all these hotels coming. There's about 2,500 rooms currently under construction. We will start feeling the effects of those in 24 and 25. I have a list here of about another 7,500 that are right behind it. Don't know if all 7,500 will get built, but I'm sure that we'll get another 3,000 or 4,000 rooms out of this wave of investment in Jamaica. So when you ask us how's the future for CPJ, we have lofty targets for this year. We're keeping our foot on the pedal. This year will be more of a flat reconsolidation year, but 24, with the new hotels coming fully into play, the investments that we put into the ground this year, which will be done in third and fourth quarter of next year, our third and fourth quarter, we feel like we're gonna move the needle. So right now we're projecting 170,000 in sales for this year. That's our goal, and I think the following
Million.
year, we only think in U.S. And I think
you said 170,000.
But Tom, I want to tell you that Gary said he's expecting $12 million from us.
Right.
So I think by June 2025 that's very doable, because what we're saying is
for sure.
probably 170 million sales by 24 and
Absolutely.
200 million sales by 25.
I think they will be cracking the 10 million, 11 million mark in the following year. This year we'll be right under that. And then the following year, with everything that we put in place, we'll crack the 10 and go to 11, 12. And we want to make you happy. We want to make our shareholders happy as well. So there's a lot of energy going behind all of this. You know, I'm known as a little bit of a hard worker, and you know, we're putting in our time and we're getting our grease out of it. So we're in the right industry locally. Our stores in Jamaica are servicing all these villas. The villa business is on fire, so we have access to getting that business now. St. Lucia with the store, it's going to change that business by 25, 30% growth just by doing one store. And we don't want to just do one more store there or this store. We're looking for the next one. So we see great opportunities in our 2 countries that we're working in now. We see opportunities in our export capacity with our capacity out of our protein factory and also our beverage factory. So yeah, we feel the future is very, very bright, and we will keep on moving the needle. As Mark said, prior to COVID, we were struggling for information. I mean, now we're getting better information than ever, and information is the key for us running this business. And we're also looking at advancing that IT because IT is moving very fast. Who knows? Maybe AI will be running the business at one day, you know, I mean, so we're setting ourselves up to be able to take advantage of that. So it's exciting times on this side of the island.
Good deal. I appreciate that. Go ahead,
Mark,
Gary.
Tom and Mark, my bugbear has been because when I look at the numbers, I think a lot of this growth and profit has come from your bread and butter, which is servicing the hotel industry. But you know, I'll always remind you guys in the middle of COVID, when you did that bucket deal, you would have realized that there's significant demand in the local trade for a lot of the products that you do bring in. What's the situation with that? I mean, is it that things have gotten better, so you've gone back into your comfort zone of just dealing with the hotels? Are you guys now looking to go into the local trade and expand that side of the business?
Well, I just told you that our split now is 70-30 when it used to be 90-10. So we have expanded our retail trade, and we're expanding in 2 different ways.
We've added a lot of resources behind it, and we have a very lofty goal. I don't want to say what it is, right? But you are absolutely right. We recognize the opportunities in that space, and we've hired additional brand managers, additional sales managers, additional brand associates that are working in the supermarkets. We're really beefing up our retail channel. So we recognize that it can also contribute and maybe fill the void. You know, tourism grows really when hotels are coming online, and sometimes you get periods where, you know, hotels are not being built or open. So we see retail as something that you can constantly build your business on. So we're focused on it, Gary. You don't have to worry about that.
Thank you. Good to hear.
So follow up from me, Mark, is, you know, we see the growth. And so my question to you is, what cost containment measures has the group implemented to protect the cash flow?
All right, so cost containment when you're growing at this rate is not the easiest thing, but obviously it's something that you know, you have to be mindful of, and of course be very, you know, aware of being able to offset the cost with improved revenue streams, right? So the obvious thing is we're putting in a solar system. You know, that's going to save us probably $300,000 a year or more, you know, in terms of our utility cost. When we do our ERP, it's going to be a pretty significant investment up front, but we see that as being a major initiative to be able to stop all the replication of processes and to really fine tune the way that we operate our business with less people and getting more done with less people. So that is a major initiative. And then, of course, putting in new equipment in the plants will also save us on repairs and maintenance and just give us better efficiencies. those are the kind of things, you know. Um, so we just, you know, upgrading our plant overall, whether it's IT, energy, or equipment. That's a real plank. And then um, just really try and drive revenues to cover whatever costs that we know we have to take on, like human resource capital, which we're investing in heavily.
Good deal. And a follow up to that for me, Mark, is I noticed in the, again, $20 million improvement in your working capital, which is commendable. I
Mhm.
still saw two things, and so I'd like you to expand on that. One, I saw you reducing payables by 9 million, and two, although I did see a notable improvement in inventories from 170 days to 135 days, I guess the question is, you know, can we expect to see improvements in your days of inventory going forward?
Well, again, first of all, the payables really a function of when we had, you know, the difficult times, and of course with the supply chain uncertainties. You know, Tom manages a lot of the relationships with the vendors, and you know, we hotels rely on us, Dan. If we don't have products, it's a big problem, and we take it very seriously, right? We get we take it personally if we are unable to meet our customers' expectations, right? That's what we built our business on. So if that means carrying more inventory, we will do it. And then, of course, you know, some of that was negotiated. Tom was able to negotiate. You know, he's got such great looks over there that you know, he'll speak, and people trust us. We've been doing business with some of these people since our inception. So they trust us, you know, and they give us enormous amounts of credit. If you look at our payables, as you said quite rightly, they're very low now because things are coming back a little bit more into sync. So we've been able to just say, okay, we don't need those extended terms that you gave us during the difficult times. So we brought that back into line. But we're still top heavy on our inventory, Dan. As you pointed out, we're 140 days or something, and there's opportunities there. And the new ERP system, and when global conditions are improved, I would love that. Would bring an enormous amount of cash back into the company. Enormous. We could bring $10 million into the company very quickly.
We
So
we
that's
we
the
should be
goal.
able to bring that down to 90 days.
Okay, so
I
you,
don't think that'll happen this year. We're still uh, there's still supply chain issues in certain areas of our business, and there's still price increases in certain parts of our business where we'll buy in before the increase hits us so we can have the lower cost. So we know we're still carrying heavy inventory, but I think as everything shakes out going into 24, I'd love to see that number at 90 days and bring back 45 days of cash in the bank. That cash will help us do additional expansions and other things. So another thing is we haven't been looking to borrow money and trying to bring down our interest expense. So our interest costs are relatively stable. I think we're on the right side of it versus you know what's out there. We're not paying absorbent interest, so we're not out looking to raise money on the market or borrow money at high rates, which is helping our cost of operating our business.
And
So
just to say, Dan, during COVID, we met every single obligation that was expected of the company, financially and otherwise.
yeah, no, definitely kudos to you guys in terms of the working capital management. That's impressive. And so I too look forward to seeing you getting your inventories down to 90 days. I look forward to seeing lower interest costs in the future. And then hopefully, Mark, that'll create space for you to do the other thing shareholders enjoy, which is eventually
Dividends.
dividends, pay dividends. So whilst I certainly expect to see, you know, notable growth in the stock price, I think that
Yeah,
sets the trajectory for you guys also to start paying, you know, reasonable levels of
absolutely.
dividends. So
Absolutely.
we absolutely look forward to that.
Yeah.
Sixth question for me. Seventh one, let me do that. Which specific product categories were primary drivers behind CPJ's 19% increase in revenues? Tom?
well, number one, our beverage business, our beverage department, right?
Uh huh.
Branded beverage, spirits, wines, and ready to drinks, a big part of our growth. adding some key product lines, which we'll see more growth out of them this year. So we added on Sazerac, which is a notable company, privately owned. They have the number 2 selling spirit in the U.S., which is Fireball. We represent 4 of the top 5 sellers in the U.S. And when you go down the list of 20, I think we have 13 of the top 20. So that was a big add-on. They had a liqueur line, which we're rolling out, which is a big item, which is a bread and butter item on the on-premise. And also center of the plate, protein. We've expanded in that and grown that part of our business. So those are the 2 areas that we've gotten the biggest bump from. And obviously expanding not only in the on-trade with these products, but in the off-trade or the retail segment. So that's where we've gotten our big bump this year.
Good deal. Sounds good. And Mark, I think this one's for you. Does the increase in global food prices significantly alter the composition of the company's import expenditure?
That's actually a good question, Dan, because I was petrified at the end of last year because the prices were going up and up and up, right? So your sales go up and up and up, right? And your value of your inventory goes up. Everything is going up. And I've said, what happens when this starts to retreat, right? I mean, it's going to be very difficult to continue to meet those sales numbers when your cost of the box is going down. So we've seen some normalization, and the costs have been going down, and we've still been able to grow our business, right? So, we've had a great year, Dan. I mean, when you think about that, when you put that into context, right? We haven't done a complete analysis. We know how it's affected, like within categories. Some things have not gone back, but a lot has gone back to sort of a lower, base. And, we still had our $22 million of growth plus. So,
the center of the plate protein took the biggest dive, and that was in the early last year, July, starting in July, falling off, going into December, our second quarter of last year. We had a lot of commodities or different commodity products that took steep drops, right? Which also affected sales and margins, right? Because you have to move off of them. But what's interesting about CPJ is we have such a dynamic mix of products. We have our beverage division, which is all branded, which is it's not what's in the bottle, it's what the bottle represents. So we're selling something that has an intrinsic value, right? Then we have the protein business. Then we have our beverage dispensing business, which we're rooted into our customers with our equipment. So we have a really good mix. If we were just driving with proteins or our commodities, it would be a very, very tricky business because of the cycle. So we always have something that's moving in ebbs and flows that makes us work our way through the jungle, so to speak. But we managed it very, very well. The process, we managed it very well.
So just to add on to, Tom said, when the prices were running up, we had inventory and prices came down pretty hard, and we did have to make some decisions that, to move the product at very low margins. So taking all of that into consideration with the performance and the extraordinary items which you've already highlighted in your analysis, I think we had a tremendous year, Dan. A really great year.
No, absolutely. And I'm really excited about the prospects for the future. I mean, you guys have just been through sort of a black swan event and bounced back really strong, like the Jamaican economy, you know what I mean? Managed your working capital position exceptionally well, grew sales by 20%, and kept your debt under control, and the metrics look great. And so when you do take off those one-off adjustments, those extraordinary adjustments, $1.95 million, you add that back, you would have had an exceptionally good year. $8.2 million would have been, perhaps your best year ever. So I do look forward to the future. I want to see revenues getting to $170 million in the next fiscal and $200 in the year after, and you guys maintaining a sort of 6% net profit margin so that folks can do the math on what the profitability and growth prospects of CPJ look like. So with that, I want to take a few questions from our folks because they're always, going to see things and ask questions that we may have missed. So definitely want to just jump up here on social media and again, want to support the folks who come on every week and some folks just saying hello and how we're doing. So hello to Roger Mallet and Paula Hall. First question I want to go over comes in from Nidra Sinclair. Nope, I think she was also just doing a hail up. So Jerome asks, when do you foresee dividends being paid again? So I didn't make it up. That's the first one I'm seeing. So
Well, basically, we're having a record year of capital investment
yeah,
at CPJ. And that once we get through this year, we absolutely would love to be paying dividends. I think towards the end of this fiscal year, there could be a window to do that, providing, we've got those investments in place and we've not had to go out and borrow too much money. We really just don't want to rely on the markets right now with the interest rates where they are, and you've already predicted that they're going to go down. So we know that you have your finger on the pulse, Dan.
absolutely.
Maybe Gary, when's the interest rates coming back down?
It's going to take a little bit longer than people expected. BOG has signaled that interest rates are likely to go higher before they go lower. Unfortunately, inflation is persisting outside of the 4 to 6% band. So if it doesn't come down, if inflation comes back in above that level again, we shouldn't be surprised if we see an increase in interest rates over the next couple of months. And so I think you'd be probably looking at somewhere around the first quarter of next year before you might see a tempering of interest rates. But it's all about inflation and what inflation is saying.
Absolutely. I agree with that totally. Okay, next question coming in is again from Jerome. If you guys don't mind sharing, what's the most profitable revenue line or category for the business?
I would say that spirits is like a very strong business for us. It has a lot of brand. And Tom?
I think all the categories that we're in have their day. It could be. It just depends on, timing, right? So I wouldn't want to say exactly which category is the most profitable line that we carry.
Okay, got that. Here's an interesting question coming in from Philip Burgess. Are there any acquisition plans in the pipeline, and is a capital raise still being considered?
I'll leave
Tom, you
that.
want to that? So I would say that we definitely would have our eyes. We don't have something on that we're acquiring this minute. We're doing, as I said, we're undergoing a major capital program for ourselves, right? So it might be a little bit difficult. We did have a target last year. We got it right up to the boat. Conditions in the financial markets changed on us. Interest rates went from, we expected 6% and they ran up to about 9%. Kind of changed the numbers. I think we could have still gone into it. We're not going to take that fully off the table. I think that's the best way to scale the business. But for now, we're just going to focus on building out St. Lucia, building out Jamaica, taking advantage of these opportunities right at hand. And if something good comes along, we'll absolutely like Jerome's help in making it happen.
And Tom, for sure, I know there could be a 2 or 3 new retail stores in the upcoming year. I mean, that's not out of the question,
Well,
Tom.
Yeah, that's not acquisition. That's more steady but sure with our current plan. I mean, right now we have a big one that we're opening in St. Lucia. We're tweaking the retail stores that we have here, management-wise. So we're working at that because we feel that we can get more out of it. Remember, this is not a business that is core to myself or Mark. So we're getting better and better at it. So I think more retail stores in CPJ markets, chef markets, we have areas that we would like to be in are in the wins. And I think in St. Lucia, where there's a monopoly, Massey has 13 stores in St. Lucia. We're the competitor going with 2 stores. Our second store is in an amazing location, and we feel that once we make that successful, we'll do more stores in St. Lucia as well. So that business is going to change and be more retail than institutional in the long run because the market's not growing on the on-premise side. So that's sort of organic growth in that area. But steady but sure wins the race. I think that we're proving that out. We're not borrowing a lot of money. We're not taking on expensive debt right now to expand. And I think that as we go through this year, we'll see the fruits of our labor.
Good deal. I got one more question for Mark, but I do want to take note of the international presence this program has and acknowledge Jermaine Davis, who's giving us a shout out from China. We've got folks tuning in from Florida. We've got folks tuning in from Canada. We've got folks tuning in from UK. So thank you guys for joining the program. We really appreciate that. Mark, my question to you. I saw my chairman, speaking of social media, tweeting that CPJ will pay over $36 million at the wharf this year. Meanwhile, the company is losing potential business to illegal importers of the stuff who supply it straight to the hotels. What are your thoughts on that?
Well, your chairman loves Twitter, But he's absolutely right, Dan. And we're paying, as you said, close to $40 million US at the wharf. Okay, that's pretty material. I know we're in the top 5 in the country when you take out the oil and the oil imports. So we would like to grow that to 60 million, and we know we can. Right? There was a time when we were sole distributors of all these alcohol brands, and we were only able to import 10% because the leakage at the port was that great.
Wow.
That was stemmed, yeah, not long ago. We lost lines because they got tired of, seeing us not being able to perform. But we had the contracts with major people to sell the product to, but we just couldn't sell it because when you do the math, and we'll never get into something, Dan, that when you do the math the right way, there are other people selling something lower than you. Okay? So that, what your chairman is alluding to now, because alcohol has been regularized, it's been made whole now. It's more like 90-10, although there's been a little bit of a slip during post-COVID. Little bit of slippage we're seeing. Some of the places that we normally sell to, we're having a tough time selling because there's other product in the market at a lower price. But let's just talk about produce, right? The hotels use a lot of produce, and Jamaica doesn't grow all the produce. So you have apples, berries, pears, kiwi fruit, peaches, all of those things, right? Radicchio, the list goes on and on. The duties on those items are anywhere from 100% to 150%.
Wow.
Right? So in CPJ's 29 history, we've never imported one grape, one pear, one apple, right? And that's despite having the customer, the infrastructure. We do it in St. Lucia. It's a good part of our business. So that's probably 15 to 20 million. Tom can confirm, but that's a good chunk of business that if that was regularized, brought into a reasonable level of taxation, and the businesses that could do it in the most efficient manner would get the business, we feel that we would pick up a good chunk and would meet that 250 million target a lot quicker, and the government would earn more revenue. So, I know Chris, your chairman, is tweeting. Keep tweeting, Chris. Maybe somebody will hear it.
I appreciate it.
How much do you think that's worth if we were able to get that?
It's in the hotels, we can supply 65% of what they need. What we sell is about 65%. I'm not saying we get 65%. We may get 50% of what they consume. The other 35% is produce and chicken and beer and local rum, things that we don't sell, right?
Right.
And produce is a big nut. Produce is probably 15% of their overall food budget, maybe 20. 15, it's a big number.
And we've never
Uh,
imported one item.
the other thing about the
Wow.
produce business, we're sitting with 170,000 square feet of warehouse space. We have 16 doors on the front of our building. I think 12 of those doors are refrigerated. We have the temperature control rooms. We have the trucks that can go, with multiple temperature trucks to get to the hotels. And when you see what people drive up to these hotels and deliver in the back of a pickup truck, grapes and berries and peaches and apples in an open back with a tarp over the back, and they drive up and they're sorting through good, bad, and ugly on the docks. It's not pretty. And as the hotel industry expands and grows, something's going to have to be done. I mean, if we get another 10,000 rooms in Jamaica, it's a hard way to operate. Obviously, we have local production, but it's seasonal. So you get tomatoes 7 months out of the year, and 5 months of the year you don't get tomatoes. The tomatoes that you get for the 7 months of the year are not consistent, so they're different sizes, shapes, etc. So to have a top-notch quality tourist product, something's going to have to be done about the produce. But we can't afford to pay 150% duty or 200% duty on something that's going to last 14 days before we have to put it in the trash can, and somebody else is going to come in and circumvent it. We can afford to import alcohol that we pay 100% duty on. And if we don't sell it today, we can sell it tomorrow or 2 weeks or 2 months if if there was a smuggler in the market, right?
Yeah.
But on the produce, you can't take that risk. It's not worth it. So proper controls, proper logistics, taking the product to the customer, refrigerated in the way they should be receiving it. We can do that, but we can't be in that business because of the high taxation and the other people that may be importing that stuff that may not be paying the tax. It would be a lot more money in the government's pocket. I mean, we fought to get the duties down on spirits for 5 years, and in 2003, right, Mark?
We got it in 2005.
2005, the duties were reduced. And I can remember Mark being in the Minister of Finance's office and said, I'll put everything I own on the table if you don't get more tax,
Right.
if you lower these taxes. And right now, that's why we have a wine culture in Jamaica right now. It's because the taxes were lowered to a reasonable rate where people can afford them. Spirits were lowered as well. They went back up in 2011 a little bit. And the government did plug the holes on the smuggling.
So what you're saying, if Mark speaks to the minister, we're good?
I've already spoken to the minister, Gary, and we'll see. If your chairman keeps tweeting, maybe something will happen.
Well,
Yeah.
I don't see your Twitter account, Gary. Do you have one?
Chris is enough for everybody.
well, I will personally speak to the Minister of Finance. He's a brilliant guy, and it sounds to me like the government of Jamaica is having huge leakages in relation to produce. Chances are they're not collecting the revenue somebody else is, and so they need to look at the taxation regime there so that we can have legitimate players in the space, bringing in the goods, providing better quality to the hotels, and the government of Jamaica increasing their revenue intake, right? You guys are saying you're happy to pay reasonable amounts of taxes to do your business, but it's clear that if you were to pay 100, 150%, there's somebody who's selling the good at a cost below you, which doesn't make good logical sense. And it sort of reminds me of the illicit trade for cigarettes and the difficulty that Coors has in that, their only skew of business. So thankfully, it's not even a skew of business you do, but it's something you could potentially do. Well, guys, I really do appreciate you guys coming on the program. That's it for today's discussions. And I'd like to thank our viewers for their support as always. Tom and Mark, it's always great to have you guys on the program. So big thanks to you guys for being a part of another great discussion. Folks, if you're curious about our updates on our virtual investor forum, then find us on social media. We share our live stream dates and our upcoming guests on our social media pages. So give us a follow up to learn about all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click on the bell to receive all notifications. I'd also like to thank our CEO, Gary Parrott, for being with us. Thanks, Gary. Really appreciate that. And Tom and Mark, we're definitely going to have you guys back in the next 6 to 9 months so we can see how you're doing en route to your $170 million in sales and eventually to your $12 million of profits. Folks, this is a great stock to invest in. By buying CPJ, you're buying Jamaica and you're supporting our push to provide the tourism sector with good quality products. So Mark and Tom, thanks for what you guys do. We really appreciate it. Well, folks, again, that's it for today. So remember, wise investors, slow and steady wins the race. And we'll see you guys next week. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.